On June 12th, the global financial landscape is going to shift forever. Elon Musk is officially taking SpaceX public on the Nasdaq under the ticker SPCX. This isn't just a stock market debut. It is a textbook hostile takeover of the entire global financial matrix. Targeting an unprecedented $135 a share, SpaceX is aiming to raise up to $75 billion in cash. To put that into perspective, it completely obliterates the previous world record set by oil giant Saudi Aramco. But Wall Street isn't celebrating. Behind closed doors, institutional asset managers are terrified. Why? Because this IPO isn't actually about rockets, and it's not even about Starlink satellite internet. Hidden deep within the SEC prospectus is a staggering revelation. SpaceX has subtly declared that its true addressable market isn't space at all. It's an eye-watering $26.5 trillion AI and orbital cloud infrastructure monopoly. What does Elon know that the public doesn't? In this video, we break down the secret mechanics of the $1.7 trillion SpaceX play, how it will make Elon Musk the world's very first trillionaire, and the exact reason why this listing has legacy hedge funds panicking. If you want to understand where the world's real wealth is moving, hit that subscribe button right now for big wealth insights, because the economic landscape is about to change forever. To understand why Wall Street is so intimidated, we have to look past the spectacular rocket launches and focus purely on the raw corporate math. Historically, investment banks have controlled capital. If a company wanted money, they bent the knee to Wall Street. But SpaceX has achieved something no corporation in modern history has done: absolute vertical integration and global infrastructure dominance. Today, SpaceX effectively owns a monopoly on the commercial space economy. They launch more payloads into orbit than every country and competitor on Earth combined. By driving down launch costs to a fraction of the legacy industry's prices via reusable rockets, SpaceX didn't just compete with legacy defense contractors, it starved them out. And with that foundation, they built Starlink, a global satellite network that already has over 10,000 satellites in orbit, bleeding legacy telecom companies of their subscriber bases day by day. But if Starlink and rockets were the whole story, a $1.77 trillion valuation would be considered highly overvalued for a company that technically reported a $2.6 billion operating loss last year. Wall Street knows how to short a loss-making tech company. What they don't know how to handle is what Elon Musk did next. Here is the core reason for the panic. The massive wave of capital in 2026 is entirely driven by one thing: artificial intelligence. Tech titans are desperately trying to raise hundreds of billions of dollars to build terrestrial data centers to power the next generation of AI models. Alphabet is looking to raise $85 billion, and Anthropic just filed for its own blockbuster listing. But those earthbound data centers face two massive existential bottlenecks: power grids and cooling. Enter SpaceX's masterstroke. Hidden within their IPO filing, SpaceX explicitly outlines plans to utilize a massive portion of the $75 billion raised to build out space-based AI cloud infrastructure. By deploying massive server architectures directly into orbit, powered by 100% direct solar energy and cooled naturally by the infinite cold vacuum of space, SpaceX intends to bypass terrestrial energy grids completely. They are merging their launch logistics with Musk's AI firm, xAI, to create an unshortable computing ecosystem. If this succeeds, SpaceX won't just be a rocket launcher or an internet provider. They will become the primary landlord of the global AI brain. Analysts are realizing that buying a single share of SPCX isn't a bet on the space economy. It's a bet on telecom, defense, cloud storage, and artificial intelligence, all under one single sovereign umbrella. And that brings us to the most terrifying part for institutional investors. The rules of the game have been completely rewritten. For decades, the standard Wall Street playbook for a public company has been simple: Investment funds buy up millions of shares, gain seats on the board of directors, and force the CEO to optimize for short-term, quarterly profits. If the CEO refuses, they fire him. But Elon Musk just blocked them completely. According to the SEC filings, SpaceX is utilizing a strict dual-class share structure. Even after raising $75 billion from the public, Elon Musk will personally retain an astonishing 82.4% of the total voting power in the corporation. This officially designates SpaceX as a controlled company under Nasdaq rules. What does that mean in plain English? It means Musk is exempt from standard corporate governance requirements. Wall Street can pour tens of billions of dollars into this stock, but they will have exactly zero say in how the company is run. Musk can choose to lose billions more developing Starship to go to Mars, and shareholders cannot stop him. Furthermore, this IPO will instantly launch Musk's net worth toward the $1 trillion mark, giving a single individual more raw financial leverage than entire sovereign nations. Wall Street is terrified because they are being forced into a corner. They either miss out on the largest wealth generation engine of the decade, or they hand their capital over to a man who refuses to let them hold the steering wheel. So, where does that leave the retail investor? In a shocking twist, SpaceX has reserved up to a quarter of its massive share allocation directly for individual, everyday retail investors. Platforms like Robinhood, Fidelity, and SoFi are actively opening the gates for standard accounts to bid on the June 12th opening. But as growth investors, we have to look at the cold facts. Trading at over 92 times its current annual revenue, SpaceX is entering the public market with a valuation premium far richer than any of its big tech peers. The upside could be historic, but a single launch failure or regulatory roadblock could cause extreme, unprecedented volatility. The financial elite are terrified because they can no longer control the narrative or the capital. The SpaceX IPO is a direct testament to how the definition of wealth is evolving from physical assets to orbital infrastructure monopolies. But I want to hear from you. Are you buying an SPCX at $135 a share on day one? Or are you sitting this historic launch out? Drop your thoughts in the comments below. If you found this deep dive valuable, give this video a thumbs up and make sure to subscribe. We track the movements of the world's elite so you can build long-term, unshakable wealth. Thank you for watching, and click on the next video. We'll see you in the next video.